My name is Erica with Motion Mortgage, and I have been asked by First Home Alliance to share a 30-minute presentation about the home ownership process with regards to the mortgage loan application. I've worked with First Home Alliance for almost 4 years now as one of their loan officers, and I have had the honor to work with many of their clients with understanding the loan application process, understanding numbers, understanding a credit report, how to heal a credit report. So it's been a privilege to work with them. I have seen them walk beside many families to get to the point of being very confident when they make an offer and that their end goal is sustainability with the mortgage payment and just leaving a legacy for their family. So it's an honor to do this. A little bit about myself is I've been in the mortgage industry for about 7 years. I started as a processor, and then I got my license and have been able to originate for families in Maryland, Virginia, and Florida. So it's very exciting to share this information. It can be a lot of information, but it's good to start understanding the process if you're interested in buying a house in the next year. So I hope you enjoy this and that it is educational and helpful to you. So I'm going to try and get my PowerPoint presentation up. I'm a little new at sharing this. I think I'm sharing it right now. Okay, so hopefully you can share the screen with me. So I'm going to talk about, like I said before, the homeownership process. What I would like to do is just talk about what is going on with credit. What is a credit report? How to heal your credit. I say it in terms of healing and not just fixing, because oftentimes a credit report is not a quick fix. Okay, it takes time. If we're having some late payments or there's a previous foreclosure, I just want to talk about what the time frame is in getting our score to a place of being able to qualify for a home. So we'll talk a little bit about that. And then once we move forward with the pre-approval process, I will talk about who we need to speak to, some of the documents that we will be needing for free pre-approval process, and then the different types of loan programs. There's some different down payment options that I want you to be aware of, what closing costs are, so a little bit about the financials with the loan process. And then once we are pre-approved and we go under contract, then what is the process? So I'll talk a little bit about a home inspection, what an appraisal is, title work, what goes into underwriting, who's reviewing your file, and then going to a settlement once we get your loan clear to close. Okay, so understanding a little bit about your credit, it can be something that we don't really know. We don't use credit unless we're buying a house or buying a car. It's just something that you hear about, and maybe we're not really familiar with everything that's reported on the credit report, what your score is, if even is. So credit is very important to a lender because it tells them, am I responsible in making my payments on time? That is the number one thing that the lenders want to know. You have all these trade lines, credit cards, student loan payments, maybe a car loan, and we can see the history of, are you making these payments on time? So we've heard of a FICO credit score. There's different ranges. I mean, they can be 300 to 800 scores. And the three bureaus that are the reporting agencies are Equifax, Experian, and TransUnion. So when we have a credit card and we make our on-time payments, okay, they report to these bureaus, and each one is a little bit different. However, they do their algorithm in coming up with a score. That's why we have 3 different scores with these bureaus. And lenders will take the middle score for qualifying factors. So let's say we have a 650, a 660, and a 670. So we'll take the middle of that score, and that is what we would use to qualify. One question that I do get asked is if there is a borrower and a co-borrower, like a husband and a wife. The lender takes the lowest of those 2 scores. So let's say that the husband's score is 660 and the wife's score is 640. Well, we would use a 640 score as the score for qualifying. I put on our website annual credit report. You are allowed to pull 1 free credit report to review. And this is a good thing to do because if you're looking to prepare to own a home, we want to make sure that your credit is correct and accurate. The things that are reporting are correct and accurate. And to know what's going on if we had a late that we didn't know about, or if there was a collection that we didn't know about. So it's good to review your credit score and your credit report. So you can go to that website. Oftentimes people have Credit Karma. That is a free online resource that you go in and make an account, and it can pull data and kind of populate what your score is. It is not 100% accurate with what the score is that they provide, but I find that it's helpful in working with some people that we can see trends. So let's say we have a lower score and we want to do some things to boost it up. Over time, we can see, is that score going up? So having Credit Karma is very helpful. And then another thing that I wanted to talk about is what's listed on your credit report. So there's a lot of information on there. It has your personal information, your date of birth. It will have different trade line histories. So if you have a credit card or student loans, it will list all of those, what the open date is, what your scheduled payment is. So it will have a lot of your history of your trade lines. So revolving trade line is like a credit card where you charge it, you pay off a minimum amount. Installments are things like student loans where you have a balance and you make a scheduled payment every month. An open trade line is like an Amex card where you charge money and then you have to pay all of it off at the end of the month. Collections, I'm sure we're familiar if there's like a medical collection on there, so that will be information that's reported. Another thing that has started to report on your credit is rentals. So if you go and you're renting an apartment with a management company, some of them do report your rental history. And that's very important because it has something to do with where you're living. Lenders are very interested in making sure that you're making your rental payments on time. Public information is another item on your credit report. It will show if you have any judgments, any child support sometimes is reporting, if you've had a bankruptcy, when it was discharged. It will have your job history, address history. So it's very detailed in the information that it's providing. And then it has credit inquiries. So if you are shopping for a car and you go to CarMax, or you're shopping for a loan and you go to Bank of America, it will show when your credit has been pulled. So a credit report is very detailed. I have seen, I think I'm going to talk about this on the next slide. So healing your credit, The first thing I would do, and all of you are familiar with First Home Alliance, is I would contact them, just start talking to someone. It is really important to understand what is going on with your credit. First Home Alliance can do counseling. They can ask you to call a loan officer, and I can review it and just say, you know, a lender may want that paid off, or a lender may not care if you have that collection that's $200. So it's important to start asking someone who is familiar with what lenders are looking for and the best way to start healing your credit. The biggest thing, if you're wanting to boost your credit score, the most important thing is making on-time payments. However the algorithms are in creating a credit score, it is the highest percentage of your scoring is making on-time payments. So whether that is putting it on auto pay and just making sure that every month all of your credit cards at least have their minimum payment paid. So, and it's important to review for any incorrect information. Errors happen, and I've seen where I pull a credit and they say, oh, my credit score is in the 700s. Well, there may be some incorrect information on there, and they had no idea, and it's affecting their credit score. So it's good, even if you're several months down the road from interested in buying a house, it's good to review the information on your credit report, because if there's something that needs to be resolved on it, we have the time to correct it and to allow your score to adjust for that correction. So 7 years from the date of last activity, that is a trade line. I get this conversation when there is something derogatory on a credit report. If it's a collection that's 6 years old, many people when they go to buy a house, they think, oh, I want to resolve this collection, so they call it a collection agency. Well, that activity resets the 7-year clock. And the reason why 7 years is important is because after 7 years of inactivity, it will fall off from your credit report. So, you know, I've seen some collections where it's going to fall off in the next couple of months. It's been sitting on there a long time. There's been no activity, no payment, no instigation with the collection company. And I would just say, you know, leave it alone. If you want to resolve it now, you have the financial resources to pay it off. You can get it cleared up. That's fine. Sometimes if you just leave it there, it will eventually fall off. Another way to help boost your score is to keep your balances 50% or less of your total credit limit. So lenders want to see money management. So, you know, your score will be affected if you're maxed out on all of your credit cards. So one thing, if you're preparing to buy a house and you want to see your score go up, is to start paying down high balanced accounts. So that will help your scoring also. And then another thing is to not co-sign. I know sometimes we're enticed. My child wants to buy a car. My sister really needs some extra money. She wants to co-sign. She wants me to co-sign. And what that does is, if you want let's say my child wants to buy a car and you co-sign, even if your child's making that monthly payment, it's still showing up as debt on your credit report. And so that affects your debt to income ratios, which is another thing I will talk about a little later on. It affects how much debt you're carrying. So, you know, if you're interested in buying a home, I would not co-sign. And if you have co-signed, I would see if we could get you removed off of that account, because it does affect how much debt you're carrying. Okay, so we've talked a little bit about your credit report, and so now you're interested in being pre-approved. So the difference between being pre-qualified and pre-approved, those are two pretty familiar terms when it comes to applying for a loan, is that if you call a lender and I have a 10-minute conversation with you on the phone, oh, what kind of monthly payment do you want? Have you been employed for 2 years? Oh, okay. Well, it sounds good. I think that we could, you would be a good candidate for a loan. Okay, if I have not collected any documents and I only talk to you on the phone, that is called being pre-qualified. It is not an official pre-approval. In order to get a pre-approval letter, we need some documents to verify income, to verify assets. We have to have a loan application filled out. So it's a little bit of paperwork to actually get a pre-approval letter that then you can take to a real estate agent to start looking at houses. And so who to go to start the pre-approval process? I mean, getting referrals. Okay, many of us know someone, or family members or friends that have bought a house. Ask them, who did you use? Did you like them? Could I talk to them and see if I could get pre-approved? First Home Alliance has loan officers that they can refer out to. You can go to a bank. There's many online lenders. So, do some research and talk to loan officers and get a feel for who they are. Are they willing to have multiple conversations? Are they willing to answer the questions that you ask? So, do a little shopping and have conversations. Your loan officer who's going to be issuing the pre-approval process and walking you through the mortgage loan application, you're going to be working with them very closely from the time of issuing a pre-approval to when you go to settlement. So it's really important that you develop a good relationship with them. So once you decide on who you want to use as a lender, below here are the items needed. These are very commonly asked for items. So we need 1 month pay stubs to calculate income. If you're W-2 or 1099, we'll need to see 2 years of that. If you're self-employed, or there's a couple of different scenarios where we would ask for tax returns. If you're self-employed, if you have rental income, we may ask for 2 years of tax returns. We do ask for bank statements, 2 months worth, just to source where the down payment is coming from. And then there's normally an online application that you need to fill out. It just has basic information, your name, your address, your date of birth. So normally the loan officer will send like a link, or they'll do it over the phone. And so you just fill out that application that eventually we submit to the lender. We'll need a poll. It's a hard poll for a credit report. So we talked a little bit about preparing your credit to be pulled. So we have conversations, your credit score is where it needs to be, and I pull an official report, and that is what we also use to submit your application. There are some additional items that we could ask for depending on the situation. So if you pay child support or receive child support, we ask for those documents. If you have been through a divorce, especially if there's real estate involved, we ask for those divorce papers. If you've gone through a recent bankruptcy, there's that kind of documentation that we need. So, generally that list is about what we ask for. So I would be prepared in providing them. Sometimes you can fax it, or with an online application, there's a secure portal that you could put documents in. So those are the things that we need to issue a full pre-approval letter. So once we receive that, and the loan officer reviews everything, and we talk about what your sales price is, what you want your monthly payment to be. So once we issue a free pre-approval letter, then you can go to a real estate agent and say, hey, I'm pre-approved. Can you start showing me houses in this price range? And that is very powerful to a real estate agent and sellers, is when you go and look at houses, especially in this market, houses are going so fast. I mean, even before they hit the market, they have contracts on them. So it's very important that when you even start looking at houses, you may need to make, if you love the house, you're ready to make an offer that day. And sometimes that's needed because houses are going so fast. So once you have that documentation, once we receive all this documentation and I can issue a pre-approval letter, then the fun part begins and we can go look at houses. So another conversation that you will have with your lender is talking about loan programs, down payments, and closing costs. And so this is where it warrants a lot of conversation. Okay, so I tell my buyers that I want them to be mortgage experts by the time they're done. We want you to be very familiar with this aspect, to understand what your down payment is going to be, what are the fees that are associated with it, with closing. So very familiar loan programs. We have a conventional loan. Often if you're a first-time home buyer, it's about 3% for a down payment. There are some situations where a 5% down payment is required. And the FICO score requirement is a 640. So FHA is a 3.5% down payment, and FICO score is going to be a 580. And then a USDA, it is 100% financing. USDA is for very rural areas. So there is a website at USDA that I go to and I type in the address and it tells me if the property is in USDA territory. So it's for very rural areas. In Northern Virginia, there's not going to be any properties. If you get further south, Stafford, Fredericksburg, there may be some USDA properties that are available. And then for VA, it's for veterans, military. So it is 100% financing also. It has a FICO score of 580. So, when we talk about credit score, let's say that we're a little bit below 640 with your credit score, then it would probably be a good idea to go to FHA because they have different requirements. Portfolio products, this is something that is unique to different lenders. These portfolio products do not meet Fannie Freddie guidelines, and so the lenders can offer more unique financing options. Let's say that you've had a recent foreclosure or short sale. Well, there's waiting periods that you have to meet in order to qualify for a conventional or an FHA loan. Well, a portfolio product may have a guideline where you don't need to meet a 3-year waiting period. So, if there's a unique situation that you have that you may not qualify for a conventional or FHA loan, there may be a loan program that works for you. And it's important to talk to different lenders to see if that is an option out there. One of the things, though, with the portfolio products is they do tend to have a higher down payment. So instead of it being like a 3.5% down payment, oftentimes it is 10 to 20% down. But it is an option for those with a little bit unique situation that don't necessarily qualify for a conventional or FHA or VA loan. A very lengthy conversation that I tend to have is the difference between down payment and closing cost. So a down payment refers to this 3% down, this 3.5% down. Okay, in order to qualify for a conventional loan, you have to have 3% as the sales price, and it tells the lender, I'm serious, I am going to put some money down to purchase this home. So there's a down payment requirement, but also there's closing costs that are associated with the loan. And the two buckets that are a part of closing costs, one is escrows. Okay, the other are like title fees. So escrows, think of it as like a savings account that the lender will, out of your mortgage payment we take a little bit of that money and put it towards a savings account to pay for your taxes when they're due and for your homeowner's insurance premiums. So we have to put some money towards those savings accounts so that when your taxes are due in December, we have some money to make that tax payment. So those are escrows. And then title fees are, we have to put title work on the property to make sure there's not any liens. So there's some title fees that are associated with it. Title insurance. So let's say that, you know, you go to buy a house and 10 years ago, there was a lien that is on it for a contractor. Well, you're not responsible for it. So it ensures that any previous liens that you're not going to be responsible for. So, you know, there are some additional closing costs that are associated that's separate from the down payment. So, closing costs normally range 2.5% to 3% of the sales price. So when looking at a sales price, it's important to calculate, you know, how much total do I need to buy this house? You know, just because, let's say I say we are approved for USDA 100% financing. Well, that's great. We don't have to have a down payment, but oftentimes we have to pay for closing costs. So we still need to source some money, because when we go to closing, that's when you bring a check and we pay for those closing costs. The reason why it is a very important conversation to have is because a lot of homes at this time in this area, sellers do not provide closing costs. Every once in a while, it is common for a seller to provide 2.5%, 3% to cover closing costs, but in this market, it's very rare to have sellers cover it. And so that is ultimately you as the buyer, it's your responsibility for it. So these are conversations that throughout the pre-approval process, when you're looking at homes, to have very detailed conversations with your lender about, so you understand what you are financially responsible for. So let me go to the next. Okay, so we have the pre-approval wire. We've talked about loan programs, and now we go look at homes, and we are finally under contract, and it's so exciting. We finally found a house. And so now I get your sales contract that's ratified from your real estate agent, and I have all of your income documents. I have your credit report, so I package this all together and I submit it to a lender, and they will then review, and it's called underwriting your file for a loan approval. So who's involved is, I'm a loan officer, so I did the initial intake. I made sure that you were good with your pre-approval process. Once the loan is submitted to the lender, a lot of loan officers have processors, and they do a lot of paperwork. They'll contact you, they order title work, they set up your homeowner's insurance. So you have a lot of contact with both of these individuals. The underwriter is someone who works for the lender. You do not speak with them, and they are responsible for making sure that your application matches Fannie Freddie guidelines, so that they match FHA guidelines. So they'll just make sure that your income checks out, that your credit is fine. So, you know, there's a lot of people that are touching your file that you may not necessarily have contact with. An underwriter is one of those individuals that is reviewing your file. Title company, we talked a little bit about title fees. So they are working in the background to make sure, prepare your deed for the house. They record it once we go to closing. So they're also looking at some documentation to work on the title of your loan. So once your loan is submitted, you will receive a couple of forms. One, initially, they're loan disclosures, and they There's a lot of generic loan disclosures that you just e-sign. A lot of this is now through like a DocuSign or an e-sign process. So you go through and you can e-sign and then you can save the disclosure packages afterwards. Within that document, a loan estimate, that's a very important document, and it has what your estimated fees are. And it's not 100% accurate, but and we tend to have to over disclose the fees, but it will have what your title fees are, what we're collecting for taxes and your homeowner's insurance. So it will be, it's about a 3-page document with just a breakdown of what your loan looks like, what the sales price is, what the loan amount is, what your mortgage payment is going to be, what your interest rate. And that's a document that your loan officer should review line by line with you. As we get further along and we get closer to closing, a closing disclosure will be issued, and it looks exactly like the loan estimate, except the fees are more final. So, as we get closer to closing, I know what your title fees are. I know what your taxes are going to be that I need to escrow for. So all of that will be revised and resent to you for your review, and it will have what your bottom line is for what you need to bring to settlement for your down payment or closing costs if you're responsible for them. So the next line, these are items that once we go under contract, they're kind of check boxes that we need to make sure are completed. Your real estate agent will set up a home inspection. This home inspector will go throughout the house, make sure there's not foundational issues, make sure there's not water damage. They'll kind of look on the roof, how good is the roof, what does the fireplace look like. So they'll just make sure they have a very detailed eye to make sure the house is in good condition. I've seen it about $400, $500 for a home inspection. So that is a report that you have as a buyer to just make sure that the home is in good standing, that things are working properly. If you have a question about the HVAC system, how old is it, what condition it's in, the home inspector can guide you on that. The second report that I order is an appraisal, and this confirms what the value of your home is. So, and it tells the lender, what you're buying the house for is market value, and it's for your protection to know that the house is appraised correctly. And that ranges about $550. And the reason why I put those prices in there is because that is something that you as a buyer, you're responsible for outside of closing. So, when you go and find a home inspector, you would have to write a check for that, or I would ask for a credit card payment to order your appraisal. So that is something additionally to just be aware of when you go under contract, that you'll be responsible for those two things. So then we have to get title work. I send over the sales contract to the title company, and they start preparing the deed. So they may be contacting you to just confirm what settlement date is, how you want title to be read, if you have a spouse that's also going on title. So they may be contacting you. And then homeowners insurance is insurance on your home. So like car insurance, we call a company, if you have USAA or Allstate, and I send over a request to make sure that your home is has insurance on it. So your PITI, that is what your mortgage payment is. So we talk about what your principal, so the PITI is your principal, interest, taxes, and insurance. And when you make the payment, the mortgage payment every month, that's how it's broken down. So a portion goes to principal, a portion goes to interest, and we have our escrow account, our taxes and insurance. So when every month I'm paying this amount towards my mortgage, and that's how it's broken down. Now, one thing that's not included in your PITI is any HOA or condo dues. And That is something when we're doing a pre-approval process to just be familiar with what, just maybe you want your mortgage payment to be $1,500. Okay, so then I provide this is what the sales price is. Well, if you go and look at some condos, your mortgage payment may be $1,500, but you could have a condo due of $300. And well, that puts you out of what you want to afford. So it is important when you're looking at certain homes to know what your HOA and condo dues are, because that is in addition to your mortgage payment, what you would have to pay for. So that's especially in this area with condo dues being $500-$600, that makes a difference in your affordability. So once we go through the loan application process, things get cleared, the appraisal comes back, the title work comes back, the underwriter has reviewed everything, and then we get it clear or close. And that's a very exciting conversation, a phone call for me to make. The whole process normally takes about 30 days. It seems like forever when you go under a contract, but there's a lot of things going on with your loan during that time. So we finally have it clear to close, and we can schedule a close date, and we organize with the title company a time. And so you go there and you sign paperwork, and then you get the keys to your home. So that is the overall view of a loan application process. It can be intimidating when you're in it. It oftentimes, it could feel like a roller coaster with ups and downs, and, the underwriter's asking for something and you're very excited about the house. And, it's good to have a loan officer that is willing to answer any questions, because there's going to be a lot of questions that come up, a lot of rerunning numbers, a lot of, what's going on with my appraisal report. I don't understand everything. How do I pick homeowners insurance? So it's really important to have a very good team to work with you through this process. It's a huge decision to buy a house. And that's one of the reasons why I love working with First Home Alliance, is because here you have a team. You have people that are dedicated to walk with you every step of the way, from even months before going under contract, working on your credit, working with a budget to save for closing costs, to going under contract and understanding what is going on with the loan process, and then celebrating with you when we have a clear close and we go to settlement. So it's very exciting and it's very empowering. It can be intimidating to want to be a home owner, to go out and look for homes, and just start the conversation. Even if you're not sure you want to buy a house, maybe you want to keep renting. Maybe that is the the best option for you. It's good to at least have a conversation, to have someone run numbers for you to see, does it make more sense to rent versus buying? So that's part of the reason why you are here and interested in this class, because it starts the conversation so that you can be confident in the decision that you make. So and my contact information there. Charlene is a wonderful resource for you to just know more about the process. If she needs to make any referrals, for you to have conversations with people. So our goal at First Home Alliance is just helping your dream of home ownership become true. And that's very, very exciting for all of us. We just love it. It's such a celebration. So thank you for your time. You can contact me, contact Charlene to follow up if you have any questions about this process. And I think that, let me go. I think that is it. I just appreciate your time and enjoy the rest of the gala. Thank you.